Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 27th. So things are tired. They're in a range. Obviously, you have a lot of event risk on tap. We have a whole host of GDP figures and interest rate decisions from the BOJ, from the ECB, from the BOC. With core inflation also for Europe coming out and the US a day later with that most important GDP print for the third quarter. Things are kind of not surprised. Things are kind of getting in a little rangy limbo here. So we'll go over some stuff here today, guys, but I really don't have anything that I'm crazy about. Okay, so we'll hit DXY, Euro in a range, Sterling in a range, SPX actually levels pretty decent. Still thinking might get some upside there. Dollar CAD, Aussie in a range, dollar peso, dollar yen, and we will circle back and take a look at gold, which is also pretty interesting at these levels near 1901. Any other questions or trade setups? Feel free to throw them on the message board at any point. As always, hey Jay, good morning to you. Pete, Rohan, Steve, Ted, great to see you guys this morning. All right, you can keep this pretty brief. Here's what it looks like on the DXY. So into the open of the week, kind of wanted to just note that we were coming off of this nice range right here. The basic focus was on a reaction near 93.12, 93.18. That's exactly where we capped out this most recent test. Downslope resistance is in there, turned lower. Okay, here's your weekly open. So you're essentially testing, that right now. But no surprise, all the setups we're covering today are essentially doing the same thing, right? They're ranging in the weekly opening range, either at support or below resistance. And I just can't get too excited about it. Now, at the end of the day, it's still within the confines of this downtrend, okay? We still have that basic trend line resistance off the highs for the year that still continues to govern price. The monthly opening range clearly broke to the downside last week and has kept our focus lower. But just with everything that's going on, I find it really hard, guys, really lack of conviction to try to press any of these very aggressively here. We just got the release today, or we just got the news, I guess if it's not news, we just got the word, as it were, that essentially any type of stimulus bill from the government is kind of off the table already, heading into the election next week. So markets have to digest that. I don't know. I'm just not a big fan over here. Put a pistol to my head, still looking lower, sub 93.20. I am looking for some dollar basing, but I just don't think now is the time we get it. You know what I mean? You still have 4 days left on the week before we close out the month. The monthly range broke to the downside. I'm of the mindset, again, we should be looking for dollar basing generally speaking. But from these levels, if we buckle back below the weekly open, 92.85, the risk is still for a drop into these levels, which we were looking for last week. The last one caught at 92.52, still there. And then 92.38 and 92.28. All right, so on a break, those are your levels of support. Again, we would be looking for basing here. Near-term bearish inval, I'm still going to leave at 93.18. If we get a break above this, really nice pivot in price, former swing lows outside of downtrend resistance, you look for the threat for a larger recovery. October opens 93.79, 618's 93.87. So for me, it's really make or break here. Like this thing is just poised. I think you have so much event risk and the markets are kind of getting frazzled here heading into the election, heading into GDP figures, heading into all these central bank rate decisions. Keep the powder dry. Look for a break of this range. At the end of the day, 93.20 or above, you're looking for a larger recovery. Major areas of support still 92.52, 92.38. Any questions on dollar? Not much has changed here. And no surprise, euro was looking pretty similar. Again, really quick, dollar on the weekly chart, right? Man, getting real tight. Actively trading any dollar crosses. So Rohan, there are definitely opportunities. Okay, Aussie's a decent one I've been looking at. DXY is kind of giving you a nice precursor here for euro, but euro levels look clean. I'm not saying Rohan stay out. I'm just saying you want to stay super nimble, right? Position sizes are less. Really meticulous on the entry. You're not looking for trend trading, right? You're not looking for a 300 pip move, 200 pip move. You're looking to stay within inside this range, fine. But just know it's our range, right? So it's not the time to kind of position build, in my humble opinion. Here's euro, okay? And here's what, sorry about that. Here's what euro looked like yesterday, okay? No change. You came into that 618 retracement of the decline near 1860 last week. That was our bearish inval. We did probe and go for a quick test above, but it failed. At the end of the week, we closed right below it. So we open up this week, you pull back to a simple 38.2 of the monthly range. That holds. You know what I mean? It's a range, guys. Bearish or bullish inval, excuse me, 1762. That's the only thing that would shift my focus like dramatically lower. A breach above 1860 and you're looking for that 1900 run. Again, no conviction, guys. Momentum on the intraday chart, 50. Momentum on the daily chart, 50. Momentum on the weekly chart. You know what I'm saying? It's just, it's not there. You're holding resistance here, but we just came from overbought. So if anything, a divergent signal would be a decent sort of turn for a larger correction. All things held constant, even if we do turn in euro, we're looking as a correction, right? Broader trend still remains weighted to the upside. Deeper cut might get you some better entries for some long-term positions. But right now, the focus on this near-term range. When do you think we get some of the break of these ranges? After the elections? Rohan, I don't try to label stuff like that, and I don't want you to look at it like that either. You know, working for Daily FX, guys, I always get the commentary of what they're looking for, right? The big heads up stop they're looking for, this or that. It's not the way we want to trade, right? This whole thing is don't touch anything till the election's over. Nonsense. Nonsense. But being more nimble, being more selective, being more meticulous in your entries, reducing position size is just plain prudence in trading, right? So I don't know when the break, Rohan, when the ranges break. I know when to look at them, and when the slope converges on those levels, these give you the time value that we're looking for. But it could be on something with the election. It could be on a COVID spike. Could be on something with the ballots. All of a sudden, you get some more discrepancy in ballots, which could throw things off. Could be on. There's a whole host of things, and it's a waste of time, literally, in my humble opinion, Rohan, for us to sit here and think, well, if this happens, it'll break, or if that happens, it'll break. What good does that do you? Nothing. Most important thing is to have your levels mapped out, know what you want to do, and be ready to execute. Your timing, when the market moves, you have no control over. So the only thing we want to focus on is what we do have control over. Right, sure, he says doesn't really matter the driver. Exactly. So it could be any catalyst. I don't know, you know. Maybe one of Biden's people gets sick or something. Anything could cause the fuel, the catalyst, to start it, but we need to know where we're looking. So at the end of the day, guys, really well-defined range right below 1860 is what I'm looking for. 1762, that's the break that would open up a larger decline towards the monthly open, very similar to the backwards inverse trade we're looking at with the DXY. The only thing I wanted to highlight in last night's update is we did adjust this slope a little bit. We were working with something like this, I believe, the last update, which isn't bad, right? You still got a little play here. This did 25% line did catch the lows today, but if you just take it straight to the lows here, that 75% caught resistance pretty nice. Still could see sort of a drop towards last week's swing low there on Thursday or Wednesday, whatever that was, but you get the picture. You get the picture. All right, so range in euro. Sterling, well, no change there either. Here's the sterling trade, and here's what sterling looked like last night. We opened up Monday, set a high, set a low, right between nice fibs, 38.2 on both sides, and we're still there now. 130.60 on the upside, 129.85 on the downside. Let's just call it 129.80, the August low there. Looking for a break of this range. Really nice trade here on sterling. I hope some of you caught this last week. If you remember last week, we were noting, man, we're coming at some pretty big resistance. My favorite Fibonacci confluences, your 100 off the low, a 618 off the high, or vice versa. the level was 131.74, 131.77. Look at the price action. We highlighted this on the 21st as we were getting into this zone, saying the top side's basically really at risk here. So looking for the pullback. The broader focus is still higher at the end of the day, well above 29.79, right? Well, here's the pullback. Right off that level that ended up being the high, took out 31, took out 30.50, took out the August, or we're now testing or approaching that August low. Turns out to be a 38.2, just above. That's your key support. For sterling, for me, it's all about what play we get down there. I really hope it does drill a little bit deeper towards 29.80 because this is big. It's a basic 38.2 of the advance. It's the objective August swing low. Nice pivot in price and upslope support. So if we get a drive lower, right, I want to see some sort of reaction into this region. Exhaustion, spike low, great area of interest for entries, in my humble opinion. And we'll look to hold or look to see if this can hold the upslope. For sterling, this is kind of make or break. If this is a break of downtrend resistance, support, I'll take another stab down to 29.80, but that's about it. Sterling on the weekly chart, well, we want to talk about ranges and frustration. Doesn't get more rangy than that, right? Everything between here, guys, in my humble opinion, from a longer term prospect, anything between 27.50 and 32.50 is noise. It's all noise. So when we look at the weekly chart and there's such clarity on where we are in broader trend, where we are in general within this range, namely slap in the middle, that's when the near-term charts really become a little bit more of a focus. You want to just trade these very closely. The slope is good. At the end of the day, anything sub 29.80, I think you risk a bigger decline, but that's where I'm looking for support on sterling. Questions on British pound? Okay. Gun to your head, you're seeing more break to the top side. So Rohan, pistol to my head, I want to see this thing drop and then do something like this into slope support, right? Something like this. Spike low, maybe even a 4-hour close to fake everyone out, then rip higher. It's sterling, right? It's a notoriously professionally traded market. It's notorious for the throw over, the false breaks, and all the like, and everything in between that you can imagine. Okay, so I don't put anything past this. I wouldn't say it's quite abomination type trades, but you just have to leave a little bit more cushion. So yeah, gun to my head, you find one more push lower, you're getting some decent divergence. Momentum is holding 40, for the first time in a while, so that's pretty decent. And you look for an exhaustion low while above this for a move higher. That said, the thing that concerns me with pound is that it's been a pretty decent rally. You know what I mean? We haven't really gotten any major correction yet. So on the rally here on the daily chart, the momentum is holding 60. That's not what you want to see in bullish trends. So on the back of, a 4% rally without any meaningful pullbacks on a breakout with momentum holding 60, my concern is that weakness sub 29.80. Well, then that's just sort of a false break and you're actually looking for resumption. That could be a way worse scenario. Not my favorite scenario, but that's what we're looking for here as sterling gives us another move lower. Does that make sense? Yeah, slippery one. Keep an eye on Aussie strength instead. So we'll look at Aussie in a moment. Yeah, but that's sterling. SPX last night, last one from last night. Here's what the SPX looks like. Guys, you can't make these levels up. I literally tweeted this right after the webinar because I just wanted people to note how clean this setup was. So I gave you this update earlier, right? This was on the 21st, was the downslope. Actually, I'm sorry, let me go back. Here's what we did last night. Here was the 21st, again, side by side, right? All we did here was take this slope and modify it. So it deadens the slope to the basic parallel off the highs. That yielded this. And as we were probing yesterday at 33.80, it was a really nice spot. Basic 50% of the entire rally off of the September lows. Okay. When we modify this, and again, when you put a modified slope, all it does is match a basic slope channel, right? That's all it did, is take that line and extend it. So point being, really nice region, really nice area to find support. Look for a bounce there. Here's the bounce, 34.13, okay. 38.2 of the drop from the highs gives you 34.36. Even if it gets there, in my humble opinion, you're still in the downslope. And ideal scenario, you get 33.40. Why 33.40? Well, again, I'm a fib guy. This is the 618 retracement of the rally. This is the 1618 extension, okay, of the first initial leg decline there. So nice symmetry as far as where it's looking at. It's the January high of this year. It's also, kick it out later in time, heading to the close of the month here in October, converges on the lower parallel. So you can envision a scenario where we get some chop here, maybe a little pump fake higher as everyone says, oh, this is the low, get all those guys who are bottom fishing. And then we take one last leg lower to kind of wash out everyone. Again, ideal scenario, not a trade recommendation, per se from us, but just that's kind of where I'm at with SPX. You've nailed it lower. It was right for us to keep looking lower, even though last week we saw that rebound. Everyone was thinking right back to 35, right? That didn't happen. We were right to look lower. We were right yesterday to see the rebound. From here, though, in my humble opinion, again, the rebound's at risk into 34.36 into the upper parallel. So I'm looking for an exhaustion high here, ideally for one leg lower. Yeah, it would be a nice spot. Rohan saying so topside exhaustion around 34.40 would be a nice spot. I don't know if we get it. In fact, 34.50 something ends up being here. I'll show it to you. I didn't want to leave it on there. It's too noisy, but at 34.57 ends up being the 50 of the drop. So not a true fib, and I don't usually go around chasing 50s, but levels to be looking for, sure. Yeah. I mean, we might not even get a test higher here, to be honest with you. It looks, the markets are running with the fact that there's no stimulus. You got the nomination went through, I guess, on the Supreme Court, right? So there is stuff out of the headlines that are clearing out, but it would be really nice if we can get one less leg lower here, in my opinion. We'll see. That's SPX. All right, last few from my end here. Here's dollar CAD number 5, and here's the update from earlier. So into the open of the week, we were right below this really kind of nice confluence resistance zone. Okay, 618, 100% extension again, 31.56, 31.63. Here's dollar CAD, right? And into the start of the week, my focus was all about this zone. Now, truth be told, ideal scenario, you would have gotten a little bit of a range before the break, right? You didn't get that. It tested the weekly open happened, ran right into it. It held for a couple of hours, guys, into the open of Europe, ahead of the European Open. We popped right through. Yesterday, you got the pullback, finding support right there. Again, this is the 100% extension from the decline off the highs in September. It's the 618 retracement of the ascent off the low in that same very month. So really nice pivot zone, break. If this is a break of downtrend support, the downsides should be governed here. Okay. Bear with me one moment. I just want to see what this looks like. Could work with something like this. We'll do some work on this one. Looks quite interesting, but if the breakout is legit, 3156 is exactly what you wanted to see hold as support, and that's what we're seeing here today. Something to pay attention to, guys. You got the BOC on tap, right? Not really expecting anything major out of the Bank of Canada tomorrow, but could be a catalyst if we get some commentary. Anyway, breach higher, 3250, 3290. That's the big one. 618. June low is just higher, 33. So right, this whole zone right here. It all determines on whether we like this. Let's do this. The bullish inval on this one, I keep at the weekly open. That's what you need to mark resumption of the broader downtrend. Otherwise, I think there's a good, good, part here for a near-term recovery. Well, that's the big one, but you get the picture. So feel free to take a snapshot of that, guys. For anyone who's trading dollar CAD. Remember, anyone who's new in the room here, you have a camera button on the GoToWebinar screen to take a snapshot of any of the charts you see presented. So if we update any of the charts and you want to see the new one, here's where we were into the start of the week. We've broken this. We've taken out that 38.2. The pullback is now testing this zone again. Levels unchanged. Only thing I want you to consider is the addition of this possible pitchfork. And we'll see if that offers any guidance in the days ahead. All right, number 6, Aussie. Aussie looks pretty decent. Again, range, but it is a range right below resistance. Here's what Aussie looked like earlier in the week. And into the open of US trade this week, we noted that confluence zone at that 618 retracement, 671.58. We tested it on Friday, but we never got the full extension test this week, right? Here's the weekly open, pull back, Friday's low, holding the lows. You got slope resistance in that 618 higher. Guys, look for this contraction break to offer guidance. Okay, very simple. It's a range, and to speak near term, it's actually in range contraction. Below slope resistance, below Fibonacci resistance, below multi-month channel resistance. Here's your daily chart. Here's basic slope resistance right off the yearly highs. Here's the monthly open, 71.60, the 618, 71.58. It's all about this zone right here. Anything that would trigger a short move would be against this region. Now, with the same respect, that is our near-term bearish inval. So if we max out 71.60, I think I wrote to you guys yesterday, you're looking for a pretty strong resumptive move. Remember, the whole thing with Aussie has been spectacular with the fact that we came off of this major critical support zone twice this year. I mean, just in the last couple of months, twice as support. The breakout on the way up, huge accelerated move, was the yearly opening range high, was last year's open. It's loaded. So nice to see the first bounce really strong, second bounce getting lighter. You're going to see that consolidation, contraction, ultimately give way to a larger breakout, we hope. So near term, look for the break of the weekly opening range. If we do, which I suspect will give us the breach. So it's either a breach above 71.60 or a break below 71. Where is support if we break, where's resistance, I think you mean, if we break higher? So the breach would be 72 and 72.56. All right. Downside, critical support has not changed. It's the same thing that turned our attention twice, like I said, over the last couple of months on the decline, the just complete sell-off collapse into this region. And then again, last week, this year's open, last year's open, major critical support. That hasn't changed. All right. A lot of clean levels, guys. A lot of clean levels and a lot of clean setups. The Momo is just not there. You get this, markets start to get real rangy and really slight participation as we head into these major event risks. Obviously, the election is going to be looming, but I think this election's going to be a little bit different. We might not get that clear cut, you know, XY victor until days after. So, um, yeah, the levels are clean, but we're just waiting for momentum to give us the break. Dollar peso, number 7. So I haven't really gotten involved in this one either, but I just wanted to highlight that the false break, or what could be a false break right here, kind of interested to see how the opening range for the week materializes. So here was peso as we were sort of heading to the open, right? We had talked about this key zone last week. We broke below it. Again, that held as resistance once. It held as resistance twice. We broke below that 88.6. We were talking about the September low as support. Well, we've rebounded right off that into the open of the week. Didn't even go into bearish invalidation, which is right up here. Failed at that 88.6, and here's a duck back again. For me, this is just a clean weekly opening range above last week's low. I'm still looking for the drive into 2067 if possible, 2067.89 right here to complete a 1618 off the highs. But you know, again, just no momentum. This one's kind of just, it's been a one-way directional trade. So it's like, what do you do if you're not short already? You want to short at multi-week, multi-month lows? No, not my cup of tea. So for me, it was either going to be the breakout and correction above 29.30 to give us that topside move, or if we get the last drive lower, maybe we get a better opportunity, more definitive spike low and exhaustion low in trade to play the recovery. But as is, levels unchanged. That is number 7. A couple of ancillary setups here. Dollar yen, 104.66 is where we're trading right now. Basically unchanged for the week. That's where we opened. Range. This is the only thing I'll leave you with on dollar yen. Pitchfork that we added here yesterday has us sitting on slope support. We've been there for the last 4 days. Look for a break of the range. Very, very sensitive to dollar volatility, dollar outbreaks. So definitely keep your eye on everything that's coming up with the US GDP figures coming out tomorrow. Again, it's getting revised a little bit more in tone, I guess. I think there was 34% were some expectations. Now it looks like they're toning it down a little bit towards 31%. Either way, blockbuster quarter. So it'll be interesting to see if that offers any fuel for a definitive price action here in dollar yen sitting at support, right? Here are the near-term levels. I really wouldn't change much. 104.46, 104.45 is still going to be a level I'm watching, but these are the two key supports on the downside if we break that 104.12 level, which we already caught support with back in the September drop. So certainly an interesting play, but nothing to write home about. And finally, gold. Here's gold again. You know, last week's weekly opening range didn't even give us a break. So all of these ranges, guys, in my humble opinion, if you're not positioned already and you're not like real near-term trading, like intraday, it's a good time just to chill. I hate to not encourage a position, but if you're not already positioned, okay, i.e. dollar shorts where you're just kind of shaving some off, it's going to be a chase here because everything's so coiled up. When we do get the breaks, whether it's euro, whether it's DXY, whether it's gold, you're going to see the markets run. And I don't want to be sitting there trying to get defensive on that position. So that's all I've got on my list, guys. I wanted to keep it pretty brief today. Plus, I have a dentist appointment. So if my mouth is a little bit sore and I'm not able to talk to you guys on Thursday, I'll let you know. But stay nimble. Stay nimble. SPX, I think, is primed to rip people up. People trying to catch the lows, people trying to catch the turn and put a position on, quote unquote, I'm doing air quotes here, on the election. In my humble opinion, dumbest thing I can even imagine. Okay, people trying to say that they're positioning now for the election result. Unless you're a longer term trader, that's not trading, right? You're straight gambling. So keep your eye focused on the levels. The levels are clean. We just don't have the momentum to give us the backing that we need, in my opinion, to get a conviction bias. Look for SPX exhaustion ahead of 3440. Downside move, we break 3380, 3340, about 100 points away still, is still going to be sort of my major key support favored area to find a little bit more of a stronger reaction in SPOOs. All right, thanks, Mike. Yeah, going to stand back. Good to take a light tone on things, guys. Good luck trading, and I will see you on Thursday morning. Keep in mind, again, you got the BOJ, BOC, ECB all on tap ahead of the 30th, which will get the GDP, which will get a little bit more information from core inflation and GDP figures out of the Eurozone as well. So best of luck trading, and I'll see you then. Cheers. Jay, same to you, my friend.